Good morning, traders. John Caruso coming to you with your currency update for today. We're going to take, we did have an action-packed week as far as the data is concerned. We'll take a look back at the Fed on Wednesday. We did hear from a dovish Janet Yellen, which means that a Fed interest rate hike for September seems to be off the table. Right now, the odds for a December rate hike are tracking at about 45%. So below that 50% threshold. So if anything's confirming a dovish Fed stance on monetary policy, it's the U.S. dollar. The U.S. dollar has continued to get beaten up here. It's down over 6% year to date, currently tracking at 93.41 with near-term support coming in about 93, and then again down along 92.50. I think 92.50 could be the last line of defense for the U.S. dollar before major support levels are taken out. And this is all in the face of some fairly bullish data we've seen reported. If you look at durable goods yesterday, we did see a big upside surprise at 6.5%. The market was expecting 3.5%. We got CapEx tracking higher on a year-over-year basis. I believe that's up 5.7% year-over-year. So some pretty bullish numbers. And then this morning's GDP reading, the first estimate for Q2 came out at 2.6%. Which is accelerating on a year-over-year basis. So I do believe that the dollar has stretched to extreme levels. I do expect some support coming in. Currently, right now, trading 93.40. I'd say between here and 93. So keep that in mind. Also, switching over, taking a look at the euro. The euro has obviously been winning out because of the bearish U.S. dollar. Currently trading 117.58 on the September euro contract. I do have the euro signaling immediate term overbought. The top end of the range, we can maybe squeeze to 118 before we find some resistance, but I don't think we're going to see too much more of a stretch beyond 118 before we see perhaps a corrective setback. The one thing I'm watching right now pertaining to the euro, we did hear from the ECB last week from what I perceived as a dovish policy statement. And also, if you look at European yields pulled back after the ECB meeting. So we're kind of seeing a divergence between yields and the currency, the euro. Where typically the yields will move higher, the euro will move higher. We're seeing a divergence there. So I don't believe that German yields, European yields as well as obviously the German yield, I track the German Bund, kind of use that as a benchmark. I don't think they're pricing in any of this move in the currency, in the euro currency. So to see a corrective setback in the euro from here would not shock me one bit. Also taking a look at the British pound, currently trading 131.11. We did see a reversal on the charts yesterday on the daily chart. I do believe we might see a near-term top here where we see a corrective setback, perhaps back to the low end of the range, just below 130 at 129.85. So we'll see if that develops here over the next few sessions. That's all I have for you today. As always, feel free to reach out to me by email or by phone. I'll be around all day. We'll catch you next week. Thanks.